All right, so we got two trades to go over today, GBPUSD and USDCHF. So let's talk about it. Now, before we get into the review, both of these, the watch list for both of these plays was posted in my free Discord chat room. Okay, so if you want to be a part of that free Discord chat room, there's going to be a link to that in the video description. 100% free. It doesn't cost you a dime to join, and it also got a ton of educational material in there that you can study. So there's going to be a link to that in the video description. All right, so let's get into this review and let's talk about what I ended up trading today and the thought process behind it. Well, the first trade this morning was, so we got a couple trades, GBPUSD and USDCHF for the trades. So GBPUSD, this was a short setup. And for my personal strategy, if I am shorting something, well, then I need the market structure to be 100% operating within a bearish market structure. What that means is it's consistently putting in lower highs. It's consistently making new lows. It's that simple. So we could see GBPUSD is consistently operating within a bearish market structure. So you can see it's consistently operating within a bearish market structure. And we're topping out at the moment. We're showing signs of weakness. And this is our current drawn liquidity on the daily. So the 4-hour chart, we came up and we tested this. This is all one bearish order block in here. See this? That's all one bearish order block that we came up and we tested. So that was actually our higher time frame level of resistance this morning. So we pushed up, we tested that higher time frame bearish order block. We also pushed up into a premium marketplace. So we take our Fibonacci from that high to that low. See how we pushed up above 50% equilibrium with that price range? That means it's an expensive marketplace. It's a premium marketplace within that 4-hour price range. Then after doing so, we push up to a premium and we have, you can see it's topping out right here. So now what we're going to do is we're going to go study this piece of price action. The 4-hour, we're topping out. And then if we're going to go study this third candle right here, what we'll notice is there was a shift in market structure within this candle in this particular area. So let's go to the 1-hour chart because that's what I need next. I have the daily, I have the 4-hour, but now I need my lower time frame execution confirmation signal. And that is that lower time frame shift in market structure. Because when we were pushing up into a premium right here, we were operating within a bullish market structure. It was consistently trending up higher. But then after pushing up into a premium or what's considered an expensive marketplace within that 4-hour price range, boom, we get a big displacement leg lower, as you can see this morning on GBPUSD during London session. Remember, London sets the trend for the day going forward. Not always, but a lot of times. So we get the displacement during London session, and we have our fair value gap confirmation. So we came up, and we also took previous day's highs as well, which is a keynote thing that you want to have noted down. See right here, this is previous day's highs. So we ended up taking that key buy side liquidity as well, because yesterday's highs is a significant liquidity pool. Then after doing that, and also remember, 4-hour premium, we get a big displacement. We crack these lows. We get our fair value gap confirmation. That's what we want. At that point, it's good to go. And a big bonus for the play is also that we have previous day's lows, which is currently serving as a draw. See this? That's currently serving as a draw. And I would say that's next to get taken here very, very soon. I would say GBPUSD is headed for these lows right here. I would say that's next. Now, we're going to draw our Fibonacci from the high of the displacement leg to the low. See how it traded up above 50% equilibrium? That's my trigger point. The second it trades above 50% equilibrium, I'm getting in it. That's all I need to see at that point. Sure, we have this upper fair value gap. I'm fully aware of that. And it could draw up into that. And you want to allow for a price to draw up into that imbalance if it wants to. Because my stop was above this point right here. If it was to trade above that point, it would invalidate that structure. Okay, well, I'm not going to say invalidate that structure, but it would invalidate my timing on the play because it could pop up, take out that high, and it could just be a stop run, and then the market structure is still bearish and it could sell off. But it would invalidate my timing, and that is a good place to keep your stop because it was also the top of that key liquidity run. All right, so and it's the top of the fair value gap as well. So it pulled up into a premium. At that point, it's considered expensive. My profit target on this play was this low right here. See that? Right there. Again, this low is also a valid PT as well, but you'd be holding it overnight, and I don't want to do that. Which brings me to my next point. This was my PT, but I wasn't able to get filled on this first push lower. It just wasn't able to do it for me. It wasn't a deep sweep. Then after doing so, it came up it pushed up into a 1 hour premium within that new 1 hour price range. It found resistance right here in the 1 hour premium, and then it sold off. And I ended up just bailing right before New York close. Now, I could hold this overnight. I could have held it into New York close and probably been like, I would have been just fine because it's a major. Like, I'm not dealing with something that's not because some pairs, a lot of pairs that aren't majors, whenever you come to New York close, that spread, it can get wild on you. It can get very wild. And then I'm not a fan of holding overnight either. So with GBPUSD, I'm sure, like, I knew I would be fine holding into New York close, but I just prefer to be done with it and just be done with the trades, just lock in my gains and keep it moving. But I do think it's going to have a deeper sweep here. I do think it's going to tag this low right here fairly soon as well. So that was GBPUSD, USDCHF. This was a buy setup. So the daily market structure on USDCHF is 100% bullish. We had our shift right here, cracked that high, and then we had our swing point put in. The second that swing point is put in, it's 100% confirmation on the daily. It's operating within a bullish market structure. This is our draw on liquidity at the moment. If you look at my cursor, that is our current draw on liquidity. It's that high right there on the daily. Then the 4 hour chart was where we had our reaction off of higher time frame support, being this bullish order block right here. We came down and we tested that bullish order block in a 4 hour discount. Take our Fibonacci from the low to the high, and we simply measure that price range. See how it traded beneath 50% equilibrium? That's a discount marketplace, and it tests a order block in a discount marketplace. So we have the daily in conjunction, we have the 4 hour in conjunction, we have the higher time frame level, and then we get a lower time frame reaction. That's what we want. Then right here, you can see this is that lower time frame shift in market structure on the 1 hour chart. We crack these highs right here. We leave fair value gap confirmation, as you can see. That's that. At that point, it's confirmed setup. It pops up, it leaves equal highs up above, as you can see. And then I grab this as it traded down into a discount marketplace, because that's my trigger point at that. Like a discount, if I'm buying a discount, if I'm shorting a premium, that's my trigger point. And then it pulls back into a discount right here. At that point, it's considered cheap and you can get into play. Of course, you can wait for a deeper retracement. You can wait for optimal trade entry. You can wait for the deeper imbalances. But the second it trades down into a discount, it's valid at that point. It's valid because it's considered cheap within that 1 hour price range. So then you can start accumulating a position at that point. My profit target was these highs right here, which it's still yet to hit, but it's very likely to get taken here soon. Very likely that's going to get swept here. And I don't think it's going to take much longer for it to do so. So that was my original PT, but I did cut it right before New York close. And now some people will be like, oh, so you broke your rules. You broke your rules. You cut it early. Nope. That's a part of my rules. Like it's a set part of my rules. If I have a position on into New York close and it still hasn't hit PT, I can close it out. Like there's nothing wrong with that. That's a part of my rules. That's fine. I just don't like holding through New York close. I don't like holding overnight. A lot can happen overnight. I just ain't trying to deal with it. All right. I like to be out of my position, have that peace of mind. And my stop on it was this low right here. All right. So I was able to lock in gains. It was a small gain, but with the combination of USDCHF and GBPUSD, it was a nice green day. Nice green day. I made just over 30 grand on the day. So just a super solid day overall. So hopefully you enjoyed this review. If you did, leave a like, subscribe to the channel, and also remember, if you want to join my free Discord chat, there's going to be a link to that in the video description.